Hey traders, Killer with this week's Triple Threat Trading Live ratio room review. A little early this week because I'll be actually heading out of town. Oops, breaking my microphone. I'll be heading out of town tomorrow, so I wanted to get this out to you guys before the weekend. But as the title says, I've got some good news, I've got some bad news. Usually people want to hear the good news, so I'm going to give that to you first. The good news is we've been absolutely destroying it in the live room, and normally I'm not big on bragging and talk about numbers, but everything has just seemed to click. We've been taking we haven't been doing anything different than we normally have. Just patterns are completing. We've been on point with our structure analysis, and we've been shooting for some on a few cases some pretty advanced targets, and they've been paying off pretty good. Just to give you an idea of what we're looking at, last week we did about 333 pips total, looking at my my Excel sheet starting from October. This week we did 346 so far, and it may be more than that. So we're looking at about 700, close to 800 pips total for the month already, which is pretty darn crazy. Now, the bad news is that, what does this mean? Well, it means nothing. I guess it means we got off to a good start, but in the long-term picture, we can't get excited, we can't celebrate, because the month's not over, the year's not over. But it's a good start. Now, I've worked with plenty of traders that maybe get to this point, they get a hot start, and they do one of two things. One, they start getting over aggressive. I like to call it they feel invincible. If you've been reading my Trading, Gambling, and Drugs series on my Ratio Mentor website, then you're familiar with what I'm talking about. But they feel invincible. They start saying to themselves, hey, I'm the man, I'm the trader, I can win on anything, let's just start pulling triggers, let's start increasing position sizes, what have you, and it usually ends pretty bad. The second flaw is people get scared and stop trading because they're already at such a profit level that they don't want to blow it. My suggestion and the best thing to do is just trade through. We just have to keep doing what we normally do. If we give some back to the market, that's fine. If we increase it, that's even better. But we have to take advantage of these times, and that's kind of how I've been in the live room. Wednesday was a rather slow day in the live room, especially compared to how Tuesday went. Tuesday ended up being really big. I mentioned that we took about 5 trades in the room. Well, 4 of those trades rolled over. 3 of them were target 1 and 2 winners, I believe. The one that was still in progress was Dollar Canada right here, which hasn't quite hit target 1 yet, but stops were moved to past break even. So it's one of those pain-free trades where we can't lose. So in total, we had a big day, and over 200 pips in the live room yesterday, which is great. And for those that were syndicate members that were able to take advantage of the euro dollar call that I put out either a week ago or 2 weeks ago, that hit target 1 and 2 as well, banking about 430 pips on that trade. So in total for swing traders that took that call and day traders in the live room, we basically had about almost a 650 pip day overnight. So not bad. And again, if we can do that once a year, or not once a year, if we could do that once a month, then we're fine. Did have a one trade. We had a few trade setups today. Only one got filled, and that was a bat pattern here on pound yen. Nothing special, nothing really much to talk about. Did spike above. We're back down. For some traders took a graceful exit, and that's just taking when the market shows you the pattern's invalid, taking it off at break even. I have that rule in my trading plan. I don't use it. I'm just going to wait till I'm either stopped out or filled on targets. And you can see we're coming back down right now, but not really worried about that. Here is something cool though. If I can find my longer term charts. Cipher on Aussie yen, by the way. If we look at the pound dollar 4 hour, and talked about this to syndicate members, we're waiting for a bat pattern completion up at 69.90. So again, looking at X to A to B, coming right into our 50%, B to C, coming to a 618, and a CD completion or our D completion leg of our bat pattern here at 61.90. And what I was telling traders in the live room is, everyone's not a swing trader, but we did get a chance to enter at the same area on another advanced pattern, and you'll see it if I go down to the 5-minute chart. If we go down to the 5-minute chart on pound dollar, you'll see that we have another pattern setting up. X down to A. We have our A up to our B coming to our C, and we'd be looking for a D completion up this way. But what we're looking at is a butterfly pattern. Fibonacci retracement from X to A. You see B comes in at a 786. B to C leg doesn't matter too much as long as it passes 3D2. You can see we come to a 618. And again, the way I do my butterfly patterns is a little different. I don't necessarily draw an ABCD completion. Rather, I'll take my Fibonacci extension tool and I'll do a Fibonacci extension from our A to our B. Look for a 1618 of that, which you can see lines up there. And I'll take a Fibonacci extension tool and do a Fibonacci inversion going from our A leg back up to our X leg and look for a 127 inversion to line up with that previous 1618 extension. Let's go orange today. Beautiful. And what you'll see is when we line all that up and we're looking at our butterfly pattern completion at our Fibonacci confluence level, what do we get? Well, we get our butterfly pattern completion ending at the same point as our bigger, and you still can't see it on this chart, but as our bigger bat pattern that we talked about. So what does this mean for a trader? Well, it means if you're strictly a day trader or a lower time frame trader and you stay away from the higher time frames, it's just a way to think about advanced targets. Now usually we're looking at Fibonacci retracement from A to D. Up here, looking at targets being either 3D2 or 618. Those are the basic default ones that most traders use. 382 being target 1, 618 being target 2. What you can do, because you have some higher time frame confluence, you can take your normal target 1 off here, and we did this yesterday in the live room with pound dollar. Take your normal targets off here, 382, but instead of taking second targets off at, where are we at 618, you can say to yourself, hey, we have a higher time frame pattern forming. If I were involved in this higher time frame pattern, we'd be looking at targets coming down to 6107. You would say, hey, I'm going to take a shot on this. Here we go. I'm going to take a shot on this and shoot all the way down for 6107. Is it a reach? Yes, it's a reach. But it's something you could do. And if you can get away with it, I'm not saying do this every time, only when the stars align or everything lines up. But if you can get away with this, again, all you need to do is nail this maybe once a month, and you'll be a very profitable trader. And we saw that yesterday with pound dollar. We took 14 pips on target 1, and we took 67 pips on target 2, off a higher time frame pattern. So just some different things to think about when you're entering the market, whether you're a swing trader or a lower time frame trader. Hey traders, Akil here, kicking off Tuesday in the live room. As you can see by my screen, a very busy day. We're actually involved in 1, 2, 3, 4, about 5 trades or 4 trades right now. I got 2 of the same chart up. Let me switch that. About 4 trades right now. They actually just all went to red, but that's part of trading. We'll see how it goes. We did have one winner today so far, which is pretty cool, and that's the one I want to talk about. If I bring over the 60-minute chart of my pound dollar, and we, well, get rid of some of this junk. Let's see, what do I need? This. Alright, that's good enough. Pretty much earlier in the day, I identified a level that I liked by bringing in a Fibonacci retracement from X to A. By the way, we do have a bigger bat pattern forming, as you can see. But day trading wise, brought a Fibonacci retracement in from our X to A leg. Followed that up with a Fibonacci extension from our A to our B, giving us a 127 inside here, but a Fibonacci inversion and to get a 1414, and along with some structure looking back to the left, found a level that I really liked in the market. And I think this was on the 15-minute or the 5-minute chart. The problem was couldn't find a reason to enter. Market didn't go oversold, which invalidates, or overbought in this case, which means I can't personally take it as a double top or can't wait for a double top. So it was a good level I liked, but just couldn't take it. So I told the traders in the room, hey, this is an example of a trade where you just got to pass. Now what happened later in the day was, looking on the range bar charts, we found a potential bat pattern, and actually which I'm long right now, found a bat pattern on here which came up to our 786. And for you traders that have been with me for a while, our 786 is our aggressive C level. So what I did was entered this trade at an aggressive C, so got in around, if I can get the right button going for me, got in around, there we go, 61.27. Really close stops right above A, because we know if our A leg is broken, that invalidates our trade. So looked at a risk of about this much and shot for a reward all the way down to our bat pattern completion. And usually I'll take half position off at a retracement to our B leg and the full position off here, but because there wasn't a lot of room in here just pip wise, decided to take the full position off down here. So we made about 20 something pips going down, stopped and reversed, and now I'm going long in hopes that this smaller bat pattern will complete. Looking for target ones around the 618 retracement, and then looking to trail targets to the completion of our bigger bat pattern. So will this work out? Who knows? I don't know. You know, if I did know, then I'd be the best trader in the world. But if it does, we're setting ourselves up for some pretty good profit from a very small time frame. Now, speaking of aggressive C's, we did have one that moved pretty good. And for syndicate members, those of you that are members of the six-figure syndicate, you'll remember this from a week ago. Talked about an aggressive C on a euro dollar. Did a video this morning, a free video for all you guys, on the smaller pattern inside of here and how to deal with it. But what we're looking for here in blue was an aggressive C trade from down here, again our 786, about 128.71, looking to take targets off at a retest of our B leg. So looking at targets at 130.50. And as you can see, we rolled right up there. So if I take, bad at math, bring the calculator on. What do I say, 28.60, 28.60. Took off targets at 30.50. Almost 200 pips on that aggressive C trade move. So syndicate members, we're setting ourselves up good for the start of October. And yeah, good start to the day with that completing, and then we'll see how the live room trades finish up tomorrow. And again, just because they're in red, am I panicking? No. I've got stops in place, so I know how much I'm willing to lose. I got targets in place, so I know how much I'm willing to gain. Now I just have to wait to see what the market decides to do.